It has been to markets this morning. The Wall Street has given a major thumbs up to a lot of news items that have emerged over the weekend. To begin with, of course, there was this news of coming straight from the Prime Minister of India, incidentally, of GST reforms, and markets have given a solid thumbs up to those GST reforms. And then what we saw in the Alaska meet and the reports following that between Trump and Putin, that potentially India could perhaps evade those secondary tariffs. And look at the charts this morning. Markets are up more than 1% in trade. In fact, Sensex is up almost 1,000 points already. We will come to the sectors in just a bit and the specific stocks. First, let's bring up the market mood check at 9:20 a.m. as markets have just opened. You have Sensex up almost 1.15%, Nifty 50 up 1.17%, and great action also on lines with the large stocks coming in from the mid-cap and the small-cap space. In fact, all sectors seem to be and all sizes of companies seem to be in the positive territory this morning. Meanwhile, volatility in the Indian markets is also up by about 3.5% to about 12.97 levels or so, which is nothing really to complain about. Let's now look at the Nifty 50 heat map and try and see which are the sectors and which are the stocks which are actually bringing this joy and bringing this positive momentum, the much awaited positive momentum to the markets. Pull up the Nifty 50 heat map and take a look at stocks, especially in the auto sector. You've got stocks of Maruti Suzuki up almost 7% in trade. That's 6.75% or so. You've also got M&M up about 3%, Bajaj Auto up about 4.5%, Tata Motors up about 1.5% or so. So the auto sector is giving a massive thumbs up to this GST reform. Now remember, this is absolutely critical by way of the understanding of the potential news around GST reforms, which could mean great news for the auto sector, as many cars which currently face the 18% tariff, the tax, I beg your pardon, GST, that 18% tax could now be lowered to about 12%, and that is likely to add the Diwali bonanza which automakers in any case brace for this time of the year. Meanwhile, IT sector not taking cues from the strong close in US markets. The IT sector is absolutely flat because GST on services, especially on services exported out of the country, do not seem to impact the IT sector. But then there's also another piece of positive news coming by way of S&P upgrading India's credit rating. But IT sector absolutely flat, not responding to that. Meanwhile, banking sector doing well. HDFC Bank, ICICI Bank, Kotak Bank, SBI, Axis Bank, all in the positive territory. Meanwhile, look at the pharma sector, the healthcare sector. Sun Pharma and Dr. Reddy's reeling still under a little bit of pressure, perhaps coming again, no relief for this sector by way of the Donald Trump imposed tariffs. In fact, 25% already on, likely 250% on farmers. But overall, the mood on the markets this morning is absolutely jubilant, with auto sector driving massive gains. We have Ambareesh Baliga joining us this morning. Mr. Baliga, good morning. What a day. It's a Monday morning, and look at the charts this morning. The auto sector giving a massive thumbs up to the GST reforms, isn't it?
Absolutely, because I think this is positive across sectors, the reforms we're talking about. Because the consumption sector, basically, it'll come down from 12% to 5%, which is decently large.
Right.
As far as auto is concerned, auto cement, I mean, these are at 28%. They are expected to come down to 18% because 28% slab will be removed.
Right.
And clearly, there has been an expectation from the government to boost consumption, to boost private capex, basically to cushion the tariff effect. I mean, despite the Alaska meet, where there's an expectation now that the 25% penal tariffs will be removed, but still, we will have the 25% tariff. So that has to be cushioned to a certain extent by the government. And I think this is one of, the modes through which it will be cushioned. So I think overall it's very positive for the markets, and because of which we have seen markets opening gap up. Now the question is whether it gets sold into or whether we see fresh buying coming in. That's what we need to wait and watch for the day.
Right, of course. In fact, FPIs have already exited positions worth almost 21,000 crore rupees in the first half of the month of August itself. This buying momentum, well, we don't know whether it's going to continue and whether it's going to translate eventually around Diwali time into numbers or not. But you did mention that a lot of auto sector GST, which is at 28%, that slab going, it could come down to 18%, potentially 12%, depending on which are the two rates that the government decides to go ahead with. But there are also conflicting news reports that some items, especially SUVs, which are in the 28% tax slab, could move to the higher sin tax of 40%. And that may in turn be negative for SUVs, which are the fastest selling Indian automobiles, isn't it?
Yeah, but I don't think the government will take that, sort of a slab for automobiles because that's what drives the economy. And what we need right now, looking at the global situation, we need to boost domestic consumption. And the only way to do that is to reduce the GST. So I don't think it'll go to 40%. It will be at 18%.
So 18%, not 40% seems to be the view. And I agree with that, because why would the government want to penalize a sector which is doing well, which is adding to revenue of the companies, adding to corporate tax and adding to GST collection? So absolutely no concern, hopefully, on that front at all. And if anything, positive news that certain 18% tax slabs would come down to 12%. Overall, a good boost for consumption. But there are other factors as well, Mr. Baliga. And one of those factors that we are discussing this morning, of course, the first one has been this GST reform and markets giving a massive thumbs up. The second also happens to be the potential exemption from the secondary tariffs, which were to kick in from August 27th. Potentially those secondary tariffs could be on hold. But then there's also something else that came over the weekend, and that is by way of S&P giving a better sovereign credit rating to India. Now, how is that going to impact the mood of foreign investors coming to looking at making investments into Indian markets?
So that should improve, the FIF flows into India because clearly S&P upgrade is a major positive because we've seen that coming after decades. We have seen, this level. I think this is after 3 decades. I think we are seeing this level as far as the credit rating is concerned. So I think it's extremely positive, and we will see FIF flows coming in. And I think they would just be waiting for the penal tariffs to be removed. And hopefully that should happen over the next week or so.
Right, Mr. Baliga, but we are also seeing some mixed cues when it comes to FMCG. FMCG, one thought with the news of GST reforms, would universally perform well this morning. We've got Unilever up about 3%, Nestle India up about 4.1%, Tata Consumers up about 2.5%, but ITC is lagging behind. ITC is down about 0.5% or so in trade. This despite ITC also being well diversified both into FMCG as well as stationery. And that is again a big expectation that GST on stationery will reduce from 12 to 5%.
No, that's true. But then a large part of the business for ITC is from cigarettes.
Right.
And expected that the sin goods, the GST can move up to 40%. So, what we used to see earlier, around the budget time, that used to have ITC correcting because of the expectation of increase in rates. I think that's exactly what we'll see now. And and as always, whenever we see the rates being increased on sin goods, stocks like ITC correct, but then that's a short to medium term sort of a move, because post that we again see these stocks bouncing back. Because irrespective of the tax, the consumption hardly comes down.
Right, of course, that is a trend that we have witnessed over the years. Mr. Baliga, I also want to come to steel and aluminium and cement. These are sectors, again, which do have some exposure to the US market. Now, with secondary tariffs done away with, we are seeing some positive momentum on these stocks. But the fear that this existing 25% may or may not be slashed further, because now what we are hearing is that the US delegation, which was to come to India on August 25th, is not going to come to India. So can we assume for the time being that this 25% tariff is going to stay, and at least in the near term, there seems to be the unlikelihood of that tariff coming down?
Yeah, I don't think the market is discounting the fact that this whole 50% will go off. Market is only discounting the fact that the penal 25% would be removed over the next couple of days before it really becomes due for. And at the same time, I think this 25% will continue. That's what the market is discounting for.
Okay, so this 25% will continue, and perhaps any potential talks on negotiations, seeing some light of the day, resulting in some sort of a deal, could only add further momentum to the markets. Now, Mr. Baliga, investors, especially retail investors, looking at these charts today, long-awaited positive territory for most of the stocks that they have been invested in. On a day like today, and perhaps, in the next few days, what should their strategy be? Is this the time to perhaps sell, sit on some profits, or perhaps accumulate in the hope that the momentum would continue for a little longer?
No, in fact, when the markets were correcting in the last 2 weeks, in fact, I was suggesting my investors to, buy and get fully invested because clearly, technically, also the markets had shown that 24,350 was possibly the intermediate bottom. But in this rally, yes, I think it would be prudent to book some profits. There's no hurry to book profits, but yes, I think one can get into cash to a certain extent, maybe about 10% of the portfolio, in case we see levels of closer to about 25,250, 25,300. I think at those levels, one should be booking profits.
Right, so another 250, 300 points on the Nifty 50, and Mr. Baliga says that may be a time to book at least 10% or so of your holdings could be converted into cash to book profits. Finally, before I let you go, Mr. Baliga, the IT sector continues to disappoint. We speak about this quite often on the show, but the IT sector seeing absolutely no merit in the S&P upgrade for India's rating, seeing absolutely no merit in GST reforms. In fact, if anything, still reacting negatively, not even taking cues from what happened in the US on Wall Street on Friday.
No, that's true. Again, that's because of sort of a rhetoric which keeps coming from President Trump about IT and Indian IT specifically. I think that's what is playing on the IT sector, and possibly that can affect the sort of order flows which are expected to come from US. So I think that's what is playing out. And the other issue, as far as the IT space is concerned, is the issue of AI as to how that's going to affect specific companies, whether it'll benefit. I think in the longer term it could benefit, but at least in the short to medium term, there would be issues because of AI.
Right, of course. So AI and slowing down of orders from the US weighing in on the IT sector. Mr. Baliga, always a pleasure having you here with us on News9. Thank you so much for joining us on this momentous day.